Time now for a look at the day's top business stories. France 24's Brian Quinn joins me here in studio. And Brian, you're starting with some surprisingly downbeat projections from some of America's top tech firms, including Amazon and Apple.
Indeed, Sharon. Thursday brought us quarterly earnings reports from these two of U.S.'s most valuable companies. Amazon posting its first quarterly loss since 2015 as online sales start to slip after a boom during pandemic lockdowns. Those online sales down 3% as the company reported a $3.8 billion overall loss, due in part to a $7.6 billion drop for its stake in electric vehicle maker Rivian. Overall, sales were up 7%, topping $116 billion, thanks to growth in Amazon's cloud computing and advertising divisions. The company, though, says soaring fuel and labor costs will continue to hamper growth going forward. Apple, meanwhile, posted a 9% rise in quarterly revenues, hitting $97.3 billion, beating analyst expectations. The company, though, has warned it expects to take an $8 billion hit this quarter, due on one hand to the shutdown of its Russia business over the war in Ukraine, and on the other hand to supply chain disruptions from recent COVID lockdowns in China. Analysts say they do expect those issues to smooth out after the next 3 months. Take a listen here.
We think the second half is going to be stronger because we're going to work through some of these supply chain issues that are still preeminent during the first half of the year, and that we also think that the trade deficit will also somewhat normalize a little bit more. So then altogether, we think that it's going to be a stronger second half of the year.
Turning now to the stock markets, European index is opening in positive territory as corporate earnings season heats up on the continent. New data out this morning, though, shows France with 0% economic growth in the first quarter. That's despite an annual inflation rate of 4.8% per April. Those higher prices triggering a 1.3% fall in consumer spending. The energy sector, though, driving indexes higher as Paris and Frankfurt each gain more than 0.75% in early trade. Over to Asia, Tokyo's exchange closed Friday, but Chinese markets popped after an announcement that the central government there will be taking action to support its tech sector and reduce pressure on those constricted supply chains. Alibaba shares up nearly 13%, Tencent up over 9% in Hong Kong. The Hang Seng topping 3% of gains overall, with Shanghai up nearly 2.33%. On Wall Street, Thursday's session saw major indexes rally in spite of new data showing the U.S. economy actually contracting by 1.4% in the fourth quarter. Most analysts consider that data transitory as domestic demand remains strong. Earlier, France 24 spoke with markets analyst Rehan Besson about what investors will be looking at in the coming week.
Next week is going to be very important because the Fed meeting will be happening. So it will start on Tuesday and end on Wednesday evening. And there is a strong expectation that the Fed will raise interest rates by 50 basis points. But given yesterday's weak U.S. data growth rate, which actually led to a 1.4% contraction in the U.S. economy in the first quarter, maybe there's a chance that Fed might not be raising aggressively as the markets are thinking right now. So we'll wait and see. And also, again, from the US, we'll be getting the non-farm payrolls, which is a very important data, which will come on Friday, but next Friday.
And finally, for business, Russia's invasion of Ukraine is driving inflationary pressures around the world, largely due to rising energy prices amid Western sanctions on Russian exports. The International Monetary Fund now says it expects fallout from the war to have a significant impact on the economic outlook for sub-Saharan Africa. At issue, higher fuel costs, but also disruptions in the Ukrainian grain exports that feed much of the region. The latest crisis comes as sub-Saharan Africa is just emerging from the COVID-19 pandemic, which governments borrowed heavily to confront. The IMF calling for concessional financing and grants to ease that debt load. It also says countries in the region need to walk a fine line, keeping their finances stable while also ensuring adequate social spending to avoid unrest.
It was a very difficult policy environment, but it is a region which has been very, very resilient. It's resilience that's being tested time and again, unfortunately, in recent years. But I do remain very optimistic about the medium and long-term growth potential of our countries. It's just making sure that we come through this period.
A lot of challenges for the region, also a lot of growth potential, Sharon.
Thank you for that update. That's Brian Quinn from our business desk.